Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program. Last week, let us look at the markets. I would say this is one of the worst week in the last many months. In the month of October, Nifty shot up 900 points. In the month of November, Nifty shot up 800 points. But in the month of December, from intra-month high to intra-month low, just last 3 weeks, and Nifty has fallen more than 1000 points. Nifty future almost touched 19,000, precisely 18,999. Of course, in FGX Nifty crossed 19,000, but from there, yesterday Nifty future closed around 18,900. So that is almost 1,100 point. And people say markets go up by staircase and comes down by lift. And there are a lot of data moving around. Nifty, I think small cap index shot up 55 days. And what it shot up in 55 days came down just by 5 days. So I think Nifty also from 18,800 to 17,800 to 18,900, it took almost 50 days, 50, 60 days, and to come back, it took only 1/10 of the days. Until last week, things were all looking okay. Nifty was trading around 18,500. So that is when this news, I think that news is blown out of proportion, coronavirus. And that has triggered huge sell-off. But I really do not know it is really coronavirus or, that has been used an excuse for selling or booking the profits. And the worst day is the last Friday. Last Friday, Nifty fell 1.5%. Next 50 fell 3%. Mid cap fell 4%. Small cap fell 5%. And then stocks fell 7, 8, 9, 10%. And 300 point fall on Nifty on Friday, that was just, I would say it is just unjustified. Surprising thing is that usually when some macroeconomic data changes, FIIs will get scared first and they will start selling in huge quantities, and the DIIs may not be able to match that selling. So that's why market falls. But surprisingly, the last 1 week, all the 5 days, net institutional was on the buy side, which means that either FIIs and DAs were both buyers, or whenever FIIs were selling, the DAs were buying more than what FIIs were selling. So net institutional flow was positive throughout the week. But despite that, markets, fell so drastically. And Nifty fell about 500 point last week, and Bank Nifty fell about 1,600 point. So this time, our fall, we cannot blame the global cues. So the global cues were not really very bad. Of course, US markets, sometimes here and there, it reacts to their headline news like consumer price inflation data and this and that. And there was some mini panic when Japan also tweaked its policy. But then that was just one-off issue. But our markets, fell continuously, and Friday was, it was an absolute panic. So clearly, earlier I told you the range was 18,000 to 19,000, and that 18,000 support was broken very clearly. The moment 18,000 was broken, and markets went for a free fall. And once 18,000 was broken in the spot, and Nifty fell another 200 point in just a single session, just on Friday. Now, you may remember on Friday morning I told you, usually in a high volatile market, that too especially when markets moving from low volatile to high volatile, and definitely at least once in a month, the highest open interest among the put option, so that will be broken. and the people who are buying that put option will definitely make money. So that is what has happened now. The 18,000 put option, whoever bought until last Thursday, they might not be in, like I'm talking about somebody buying 18,000 put option in the beginning of this month. Until last Thursday, they might not be in profit. But just on Friday, just one day, you know, so the prices have shot up 3 times, 4 times, they must be in profit. So this is the nature of the market. So at least once the put option buyers will make profit. The people who are buying the put option at the highest open interest. And however, there were a lot of people who are doing long straddle because of that US data. And then next day the markets did not fall. They all booked some losses. And they held on to their position. They would have made huge profit. In fact, one of my friends, that time Nifty was around 18,700. So ahead of some US jobs data, he thought markets would be volatile. He took 18,700 long straddle. That means he bought 18,700 call, bought 18,700 put. The next day market did not open violently. Next day market opened almost flat, and there was some losses. He booked the some losses like 5-10 rupees losses. But had he held on to that, and his profit would have been 5 times to 8 times by this time. And that is how market behaves. And people, the buyers, want to ride the momentum. Sometime momentum comes late. Market is designed to reward always only the minority of the people. Majority of the people will tend to lose. So 18,000 was supposed to be the strong support, and that was broken clearly. So naturally, when such a support is broken, that support becomes a resistance if the markets fall significantly from that level. So 18,000 broken on the downside, and Nifty has come to 17,800. So which means that now 18,000 will become the huge resistance. Anyway, this week, Monday is a trading holiday for US. So we don't have any clue from global markets, and they are likely to be flat to negative, and then volume will also be less. So our markets, until the expiry of this week, monthly expiry, we have 4 more trading session, and one day we will be clueless because of no global cues. So effectively, only 3 more volatile trades. Markets, crossing 18,000 seems to be a little bit difficult task. And now it has become clearly the people say bull markets work like this: two-step one, two-step up, one-step down. October and November, 2 months markets went up. December market has come down. So let us hope January and February it goes up. Interestingly, in the month of January, the first trading session was on January 3. So that time the Nifty was around 17,600. So we started this year with 17,600, and we went to 18,400 on the higher side. Then we went to 15,700. Again we came back to 18,000 plus. Again we went back to 15,200. Again we went back to 18,900. So the market swung between 15,200 on the downside to 18,900 on the upside. Such a big band. But what is happening? It's coming and closing somewhere, around 17,600, maybe plus or minus. It may not be minus, but it will be plus 200 to 400 points. And 18,000 short straddle was trading around 2,500 rupees on January 3. It will be closing less than 500 rupees. Of course, we still have 4 more trading session. Something can happen. I'm just assuming that market is closing between 17,800 and 18,000. Sometimes in a hugely volatile market, some market will be moving both the sides very high, but it may come and close somewhere where it started. Many of you may know my beach hours joke. Like sometimes, the beach horses go up, come down, go up, come down, but they don't go anywhere. Let us see what happens when it comes to economic data. So there is no much economic data, and FA participation will be less and the volumes will go down. But the problem is that when the volume goes down, intraday volatility may be more. Let us see. So we are hoping we must be happy at least if Nifty closes between 17,800 and 18,000. But 200 point range seems to be, this is only the hope, not the real situation. And of course, we can expect a market to trade between 17,500 and 18,000. For a long time, it was trading between 18,000 to 18,500, then shot up, then 18,500 to 19, it was trading for a long time, then again broke 18,500, and again only for few days it was trading between 18,000 to 18,500, and now we have to bring down the level to 17,500. So if you want to sell put option, don't sell put option above 17.6. Sell 17.5 and below. And of course, call option on Friday itself, I sold a lot of call options around 18,200. And even if 18,000 is crossed for one or the other reason, the next level of resistance will be surely at 18,200. We will see how this market goes in the final week. Markets, usually what happens, FIAs usually close their accounting by the end of December, and they will re-enter or fresh allocation will be made in the month of January. So usually the January month, in the first 1 or 2 weeks, you will know the trend by looking at the FIA buying or selling. Usually by hoping that FIAs will buy, retail people will buy in the month of December and they will book the profit in the month of January. Same thing, if the retail people think that FIAs will sell in January, 2011, I remember the January itself, the FIAs have started selling aggressively. So if they think that FIAs will sell aggressively, they will go short now, and in the first week of January or second week of January, they will book the profits in the shorts. So, but this huge panic and huge fall of 1,000 point plus, it is really puzzling. So this means that, you remember this huge fall is happening despite net institutional flow on everyday basis for the last 5 trading sessions. So that means the shorting is happening in futures and options market and rather than the cash market. So that's why when net institutional flow is positive in cash market, market should not fall so much. So people are taking huge short positions, hoping that FIAs will press a sell button again in the month of January, and they can make some profits. If that does not happen, if the opposite happens, then again there will be a huge short covering may happen. Just like market falling when the institutional flow is positive, market can shoot up even when institutional portion is negative. When I say institutional portion is negative, let us say FIA buying for 2000 crore, DII selling for 3000 crore. So their net institutional figure will be less only, but still market can go higher. So that we will analyze anyway by the end of next week. So today the video is already very long. So hope as you're listening to this audio podcast, thank you for listening.